shape up in 2014? Where are the best prospects for jobs, opportunity, and growth? Who stands to gain most, and where? Introducing Nobel Laureate Michael Spence, Academic Council Chairman of Fung Global Institute.
Good afternoon, ladies and gentlemen. We're 2 hours from the drinks. Hang on. We're going to have some fun in this hour. We've just finished the year of the snake. We're moving into the year of the horse. When we entered the year of the snake, I think we were facing a fair amount of systemic risk in multiple parts of the global economy. Europe was barely out of the woods in the sovereign debt market. The United States was stabilizing some. There was considerable uncertainty and market nervousness about the leadership transition. In China, at one point, the president-designate disappeared, unbeknownst to everybody, for 2 weeks. There was a lot of fingernails bitten off. And we've come out of this year in a much calmer state. I think, we can say that a lot of the downside risk that we went into the year with is not with us. Things are looking up in China. I think it's fair to say the emerging economies that got a bit of a scare with the taper announcement and the high-speed volatility of the capital flows that went with it are stabilizing and probably repositioning for a slightly different world. And calm, at least, in economic terms, prevails in the developed countries, even though they're not at full speed, to put it mildly. So what we want to do today with our distinguished panel is to look forward for a year and ask ourselves, what can we expect? What opportunities are there in multiple dimensions? What risks might we face, and so on. So that's kind of what we've set ourselves. We have three very distinguished panelists, each of whom is going to speak on the order of 10 minutes. I might ask a couple of questions, and then we're going to have hopefully a fairly substantial time for interaction with all of you. First panelist is Noor Mohamed Yaqub. He is the Vice Chairman of the Malaysian Sovereign Wealth Fund, formerly Finance Minister, Minister of Planning, and Head of the Monetary Authority. We have Sam Palmisano, former Chairman, CEO, and what else? President. Whatever. Of IBM, and now the head of a Center for Global Business, which he's building up to try to help businesses understand what it means to go from multinational to global. And of course, earlier today we heard from Pascal Lamy, who has an enormously distinguished career in multiple parts of the public sector. Most recently, not most recently, but up until recently, the head of the WTO. And I want to say something he said, but I think it's easier for an outsider to say, the WTO has been an enormous source of strength in the global economy through ups and downs. We really need an authoritative, credible enforcer of rules. And while there have been challenges in negotiating further trade deals, I don't think anybody would give the WTO anything other than an A+. Nobody, large or small, has questioned WTO rulings with respect to trade disputes. So, and I think Pascal can take a great deal of credit for that. So with that, that's enough from me. Or would you take over and share your insights with us?
First, let me thank Fung Global Institute for inviting me here, particularly Mr. Andrew Sheng. We go back a long way. Andrew Sheng and myself, we were colleagues in Bank Negara, and in 1989, when Mr. Andrew Sheng left the central bank as assistant governor to go for greener pastures in Washington, I took over from him. So we go back a long way. And thank you for the invitation. Of course, the topic today is from snake to horse. And horse is a very interesting animal. In fact, the ancient sages had a very interesting illustration about horses and men. They compared man and the horse in the following way. The man, the rider, if the rider is weak and the horse is also weak, the journey will never be completed. If the rider is weak and the horse is strong, they will go all over without focus. If the rider is strong and the horse is weak, there will be some movement but not much. Of course, the ideal situation is for the rider to be strong and the horse to be strong so that the journey can be completed well. Of course, the ancient sages meant to illustrate the importance of rationality. The man, the rider, should be rational and good, and the horse is supposed to be passion and ego and things like that. But today we can also use that same illustration to look at the rider and the horse. We can assume that the horse is the external environment and the rider as the policy of a particular government, or the policy or the combined policy of all governments in implementing and overcoming challenges. In this regard, I would like to speak on three central points or filters for the year, particularly for the year 2014. The external environment. The world is still fundamentally fragile, fundamentally imbalanced, in spite of opportunities accorded with the 2008 crisis. It is 5 years after the Lehman debacle now, as you know. Finance essentially has not really been fixed. Banks are even larger. The issue of too big to fail is still with us. International financial architecture, still plenty of talk. Some attempts to talk on the Walker Rule, the Tobin tax, more stringent Basel III, etc. But fundamentally, still not enough change. We have to live with that in 2014. QE continues, and we defer the problem for another day, but we have to accept the challenge in 2014. 2013 could have been worse. US fiscal cliff could have happened. QE tapering could have happened. Euro could have cracked, but didn't. But we have really deferred the symptoms, and we have not really solved the problem. Unlike the Asian crisis of 1998, unlike the post-Asian crisis of 1998, we can't really see major structural reforms to the financial system post-2008. In respect of growth, the more pressing issue is about distribution, about inequality, and about jobs. And it appears that the world has not figured out how to address these sufficiently. Job creation and growth with jobs, I believe, is the key challenge going forward. Asia, including Japan, can show the way forward along with other developing countries and in partnership with the West and other places. Asia has growth, at least relative growth. China post-third millennium will move to a consumption society and not just a producing society. That's good for China, and certainly that's good for the world. Asia will need to redefine what growth means. We have to have sustainable growth and have to address the issue of inequality. We have to have growth with equity. And also we have to define what finance is. The finance is meant to serve the real economy and to help in the social inclusion. And finance cannot have a momentum of its own to become the lord of the planet. Asia still needs to improve its governance. Asia needs to build institutional capabilities, because the essence of leadership is to build institutions. And also there are many Asias. Asia is not a homogeneous entity, and there are many unique features in Asia. The World Bank Growth Commission report, Strategies for Sustained Growth and Inclusive Development 2008, prepared by the Commission on Growth and Development, of which the eminent Professor Michael Spence was the chairman, in fact identified Malaysia as one of the 13 countries since 1950 that had an average growth rate of 7% or more for at least 25 years or longer. At that pace of expansion, the economies of these 13 countries, including Malaysia, had doubled in size every decade. Many have called these expansion economic miracles, and several of the economies as rising tigers. For Malaysia, this strong sustained growth has been characterized by, one, openness to global economy. Malaysia is clearly a trading nation with import and exports relative to GDP among the highest in the world, 141% in 2012, and we will continue to be a very open trading country. Second, macroeconomic stability. The role of strong monetary policy combined with prudent fiscal policy has contributed to growth and stability, and that will continue in 2014. The underlying strength of the economy exemplified by high savings, 34%, and strong investments, particularly in education and training, infrastructure and health services. That too will continue. The market as a basis of resource allocation, Malaysia's capital market remains one of the biggest and the most developed in the region and among the emerging markets globally. In fact, we account for more than 2/3 of all the sukuk issued under the Islamic capital market. And of course, we have capable and credible leadership. And Malaysia as a country, we achieved independence in 1957. But until 1970, poverty was the main issue. In 1970, 49.3% of the population were poor. 1 in 2 families in Malaysia were poor in 1970. Today, we have eliminated poverty. There is no more hardcore poverty in the country. And over the period, we have reached a per capita income from less than $1,000 to almost $10,000 now. We are looking to $15,000 in a few years' time. And over the number of years too, since then, we had faced many challenges. And one of the major, most critical challenge that we faced was the 1997-1998 crisis, when the ringgit depreciated by 50%, when the stock market plummeted by 70%, when half the businessmen were on the verge of being declared under the bankruptcy law, declared as bankrupt. But we did overcome the crisis without borrowing from the IMF. The only country, I should say, that overcame the challenge of 1997, 1998, using our own resources without borrowing. And also by not undertaking what the Washington Consensus wanted us to do. In fact, looking back, we were very pragmatic and we did exactly the opposite. The IMF told us to increase interest rate to overcome the crisis. We decreased the interest rate. The IMF told us to tighten fiscal policy. We loosened fiscal policy. The IMF told us to tighten monetary policy. We loosened monetary policy. And we were successful in overcoming the crisis by our own means, by our own effort. And basically, what the one element, the one most important element, looking back on the success of Malaysia, was that we have always been pragmatic. We are not prone to act on the basis of any dogma. We are pragmatic, practical. We change according to the needs of the time, and change according to the changing circumstances. And I think over the next few years, this policy of pragmatism will continue. Challenges are real, but we will stay the course, be pragmatic, and like other Asian countries, overcome the challenges that's thrown up during the next few years with plenty of dose of pragmatism. Maybe I stop at that. Thank you very much.
Noor, thank you. Michael, thank you. I thought I'll take a slightly different perspective, and I'll give you a view. I won't repeat what I said yesterday, but I'll pretend I'm still working. That's a very bad thought. Might be even a nightmare. But if I was still working and running a large or mid-sized, because IBM was probably mid-sized global company, I would be looking at these factors. Slow macroeconomic growth environment, by any definition, right? I wouldn't buy the latest economic forecast because they're always overstated at this point in time, with all due respect to my colleagues. Strong balance sheet. Yeah, everybody's cleaned up their balance sheets. I think that's a factual statement. Money's free. If you're an IBM, they pay you to take money. Today's environment, because people don't know what to do with the money. So there's an asset bubble. So you have an asset bubble, so evaluations are extremely high. So it's probably not a good time to be doing any big major strategic move because of valuations, unless somebody's going to sell you something that they don't understand, or there's something in it you don't want, right? So this is how you're planning your budget for next year. Wherever you are, that's how you're planning your budget. But you have this problem because you're measured, whether you like it or not, on 90-day cycles if you're a public company, or say annual cycles if you're a private company, on some level of budget performance. So you scratch your head and you say, after you say the world stinks, why me? I can't drink enough to get through this thing. You say, I got to find growth, and I got to push productivity. I need to be agile. I have to find growth someplace, somehow, even if it's only 2 or 3%, how you perform with the market. And I got to be productive somehow, right? Because I got to get some level of earnings growth just to pay the people much less give return to the shareholder or give it back to the families, I guess, as we heard earlier. They're going to want their dividend at the end of the day, right? That's it. So 2 dimensions. Where do you find growth? We always bet on demographics, and I'll talk about technology next. But if you're making a demographic bet, people emerging into the middle class, we heard a lot about in the past couple days, you're going to bet Asia. Might bet a little bit in Africa now, which we wouldn't have done when we made our big bets 10 years ago in China and India. But you would be betting, you'd add Africa to that list. But you'd be making a demographic bet, which is middle class expansion. Because as people enter the middle class, they demand a higher level of services. I mean, there's been a lot of discussion on sustainability, and it's very, very important. But if people were still poor in many of these regions, I don't think they'd be worried about the quality of air. I really don't think so. They'd be worried about whether they'd be fed or not. But that's all changed. They wouldn't be worried about the quality of their health care. They wouldn't worry about global brands and the quality of their products. They wouldn't worry about property rights and can I buy real estate. That all comes with the middle class. That all creates a demographic opportunity, whatever segment you're in. It's all a demographic opportunity. My old life, you have to create banking systems, credit systems. You have to transform wireless telcos. I mean, in my old life, this is what you do, right? But that's opportunity. You can reach new retail channels. Either you can do it online or you can do it the old physical way. But nonetheless, that's what they're going to consume because they have discretionary income. The other side of that is the technology side of things. Technology is very, very important to growth, and it's also very, very important to productivity. But technology takes a long time to understand and yield. The biggest shift that you're seeing today in technology is what we talked about, and Victor asked me about, which is big data. It has the potential to transform every element of a business operation and every element of society and the very corporate model itself, which is why we started this center that we've started. But it's going to take a long time to learn it. So you got to start now. Now, as I say that, the other thing I'd say about technology is totally egalitarian. Technology doesn't discriminate. Technology will attack you regardless of who you are and where you are positioned. It doesn't understand all these things. It doesn't care about your past, that you were once successful, and the new people creating the disruptive business models don't even know what you were. So what did I just say? Tremendous opportunity. If you're a new company operating here, creating the payment system or electronic commerce, huge middle-class demographic shift, you should participate in that. But it's also, if you're a traditional brick-and-mortar retailer, you need to adjust. You can go through all elements of various types of areas where the ability to evaluate information, high quality, almost real time, and make adjustments and change, whether that's consumer behavior patterns, whether that's in healthcare with personalized medicine, whether that's in public safety and sustainable transportation systems that don't pollute the environment, all those things will be addressed in this environment. So therefore, depending on where you're positioned, now the best place to be is not to be in business and start a new one. We all love young entrepreneurs, and I wish I was 40 years ago one of those. When I came to work, I was running a 100-year-old company. So I couldn't pretend I was 25. And most people in this room, I don't think, can walk out of here and pretend you're 25 and just get out of Stanford, hanging around Silicon Valley, looking for a startup. So you have to look at what you are and decide, as what you are, how you're going to deal with this phenomenon. So it'll have 2 great benefits. One will be it'll help you address the growth issue, because it will allow you to very efficiently participate in future segments that are, I would suggest strategically, you move off of your base. Don't jump someplace you've never been. If you're in financial services, don't think you're a technology company. If you're a technology company, don't pretend you're a bank. We've seen this all happen over time. That's why I use those examples, okay, right? So extend off your base, okay, and get yourself prepared to participate in that opportunity as you look at your core. The other side of it, I would really rethink your corporate structure if you are an existing company. And how are you positioned in your corporate structure? And are you prepared to deal not only with global competition, but a bunch of kids who can launch a disruptive technology model and a new payment system with about $2 million and a cell phone? Are you prepared for that? Are you prepared to go chase the demographic opportunities that these regions of the world represent for you? Can you access that market? Can you enter that market? Do you have those government relationships? Do you have the capital structure that allows you to invest? So now, I say all this because if I was in my old job, I'd be drinking a lot. Because these are really, really tough problems. But you have to, and I'll leave it on this note, Michael, you have to start now. And the reason why you have to start now, you should have started 5 years ago, quite honestly. I would have argued you should have started in 2008 when the crisis occurred. Because you're 5 years late at this point in time. But you should have started then. But if you haven't started, you need to start now. And you need to look at those two dimensions. Where can I find growth? Don't complain about my home market. If it's not there, go find it someplace tied to demographic shifts. And then how am I going to change my business model, my corporate structure, assuming not a young, aggressive Asian company comes after me, but 5 smart kids and a cell phone that know how to program, that have like total variable cost, that can do everything electronically on the internet, can approach this and absolutely disrupt your business model with very little capital investment. So you talk about stranded assets, it'll all be fun. So with that, I'll turn it over to our next speaker.
Pascal? And please update us on what's going on in Bali.
Well, so very short term, which is tonight, then a bit less short term, which is next year, and then maybe like Sam, a bit of a longer term. As far as Bali is concerned, maybe doable, not yet done, but probably on the right side for the moment, although not yet done. So let's move to next year. 3 risks and 3 opportunities in my view. 3 risks. 1, hot money in emerging countries as a result of a poorly coordinated US Fed tapering. We all know there's far too much liquidity in the system. We all know part of this liquidity will have to dry. But we all know that given the formidable interconnections we have between financial systems and financial markets, this is a risky operation. Second risk, euro quasi-deflation. And I think this one is already there. Meaning a much lower than standard euro growth, at least as compared to US and emerging countries. Japan, I think the jury is still out for next year. But given the width, breadth, depth of the euro market for us all, this certainly is something on the downside. And third, tensions in the China Sea, that would increase the risk premium on this region, which would be sort of contrary to developments of recent decades where the risk premium on Asia has consistently been reduced to the benefit of the growth, development and emergence of many countries on this region. Opportunities, three, to be balanced. One, emerging Africa. This continent is in pre-emergence. Not that there doesn't remain political problems or conflicts here and there, but the vibrancy of the business sector, the sort of bottom-up growth is impressive in many parts of this continent, and I think this will be confirmed next year. Second opportunity, less tensions in the Middle East, stemming from the recent Iran deal. Although short-term there may be sort of quite vocal reactions in Israel or in Saudi Arabia, I think at the end of the day this is a potential stabilizer of the balance of forces in the region. And third, and this is a bit more of an assumption, a clearer roadmap on carbon pricing as preparations for the 2015 climate conference take place, which of course would, I think, be great news, not only for this planet, but also for many of your businesses for whom this huge uncertainty on will carbon be priced, and if it is, which it should, how will it be priced, and if we know how it's going to be priced, what's going to be the price, I think is something that could, as the pressure of 2015 appears, be some sort of good news. To finish, a few words about the long term. No, what really matters is not next year. What really matters in this globalizing planet is the next generation. And that's, I think, really the view which we all need to have, even if during this crisis many of us have been focused on avoiding short-term damage. What really matters is long-term. And we've just got out of an exercise of this kind with a report of a worldwide commission I chaired, and which was sponsored and fed technically by the Oxford Martin School, with 20 worldwide luminaries, among which a solid bunch of Asian big brains like Liu He, like Nankan Nilekani, like Kishore Mahbubani, like Amartya Sen, and where we decided to relook at the challenges of future generations. Youth unemployment, rising inequalities, pressure on natural resources, expansion of non-communicable diseases. I mean, all these challenges are well known, but what we also know is that we know a lot about them, but we don't do that much. And how can this bridge between reasonably good knowledge and relatively poor action be bridged is what we've been working on. And I leave it that as I conclude this short input, one of our findings, and when I say our findings, we did research. We took 10 global issues that work reasonably well for the last 30 years, sort of HIV/AIDS, Y2K, 10 that did not work, like ocean overfishing or climate change, and a few that sort of half-half, like tobacco control, like anti-corruption. And we analyzed why what worked and why what didn't work. And one of the big lessons, and I'm only taking one as an example, is that coping with these challenges in the future implies what we call in the report, and there are a few copies around for those of you who are interested, coalitions of the working, which cut across the traditional silos of public institutions on the one side, civil society on the other side, and business on the third side. In order for most of these long-term challenges to be properly addressed, what we believe, because that's what we found in the reality of the last decades, is that you need these cross-cutting coalitions. The typical model being probably mega cities, who in many areas have more power than traditional Westphalian nation states, big business, multinational companies, and a number of civil society movements who themselves are globalized. And our recommendation, and I leave this on the table not just for next year, but for the years to come, is to try and use this model in order to address big challenges. And in many ways, it has a sort of Asian flavor. It's more pragmatic, it's less institutional, so maybe that's the road ahead. Thank you.
Thank you, Pascal. I've actually, the report that you're referring to, I think, is called Now for the Long Term.
It is.
I've read it. It's available on the web. It's actually really quite interesting. And I guess I hope that we're about at the point, as you said, of being able to refocus our attention on a different balance between short-term challenges and these terribly important long-term ones that affect our children and grandchildren. Let me take 1 minute and ask a couple of questions. Nor, if I understood you correctly at the start, you said we have quite a large range of unmet challenges coming out of the crisis. But then in describing, you know, an Asian approach to things that echoes something that or Pascal said something that echoed what you said, which is a kind of get it done, pragmatic, you know, deal with what you've got sort of approach. Does that make you optimistic that at least in Asia, these issues of stable financial systems and other challenges you made are going to actually get dealt with pretty effectively, if not in a year, at least over the next small number of years? Or do you think that's a sort of Damocles still hanging over our head?
I think the challenges are there. I think the question is a very good question. The challenges are there. They are not going to go away. But in evaluating on the probability that we will be able to record some growth and overcome many of the challenges, we have to look at our history. And we know from our history that we were able to overcome many challenges. China is a very good example. In the last 15, 20 years, from where it was to where it is now. And India, although things have slowed down somewhat and infrastructure is a major problem, but it also has grown out from the Hindu rate of growth of 3% to certainly 5% or higher. And in both China and India, we have created a middle class, and in many of the Asian countries, we have created the middle class. We have seen the Southeast Asian countries which were closed, Vietnam, Cambodia, Laos, which are open now, and Indonesia is doing well. So from the historical perspective, we seem to be able to overcome the challenges we seem to be able to be pragmatic. We seem to be able to manage whatever crisis that occurs and come out of it quite well. Whether this will happen in the future, of course, we are not sure. But based on our historical experience and based on what is happening right now in many of these countries, we can be optimistic, because the most important aspect of governance, of government, is that you recognize the problem. If you are in the state of denial, you think everything is okay and that there's no major issue, then there's a problem. But in all countries, and as we discuss here, there is a recognition of the problem. There is a recognition that there needs to be reform. There is a recognition that we need to move away from the rentier system. Corruption is an issue. So that itself, the recognition itself, speaks well of the ability and the possibility of us overcoming many of these challenges.
Thank you. Sam, I couldn't help but, you and I talked before, I couldn't help but thinking when you were describing, here's my business, it's whatever it is for historical reasons, here's this world that we face out there, it's not perfect in terms of opportunity, get on with it, and maybe you should have done it 5 years ago. There's a fairly wide range of governments that don't seem to be in that kind of mode of thought, to put it mildly. If I had to identify risks, I guess I would say that clear problems standing before us that affect social cohesion, that affect stability and whatnot, are being addressed here in Asia, but in many other places that we're just sitting there. We got a lot of terms for this by now, gridlocked, et cetera, polarized and whatnot. I just thought I'd ask you to reflect on why it is that businesses are dynamic and adapting and our governments are having so much trouble swinging into action.
I think it's pretty simple, because if you're running a business and you don't adapt, they throw you out. You're not protected by 4-year election cycles. You don't have the benefit or pleasure of hanging yourself up in ideology. Whether you can read well and give a good speech doesn't matter, because your scorecard's your results. It almost doesn't matter how you dress, because your scorecard's your results. So there's this ultimate accountability. So to sit there and, as a business person, say, well, gosh, woe is me, and life stinks, and geez, you might as well just resign, because they're going to throw you out anyway. Right? There's nobody to blame but yourself. Think about it, right? I mean, I'll never be a politician. I don't think I could ever even qualify for public service. I don't know if I get through the clearing process. So, I've thought about this. So what is the difference? You can't go on TV and blame somebody. You can't say, well, they dealt me a lousy hand. It's my predecessor's problem. Because it's you, okay, right? So you think about things differently. I think, though, if I applied it to the public sector, to whomever, at the local levels, you see a ton going on. You really do.
Fair enough.
If you get below the national level, at least parts of the world that I'm familiar with, heavily Europe and we've done a lot of work with the guys, and heavily in North America, you get at a provincial level, state level, city level, they have the same problems. They're worried about people's lives. And the decisions they make, they sincerely care, affect people's lives. So they are ultimately pragmatic. And they try to figure out ways to solve problems because they have to. I mean, they face the people. They don't face a TV screen, so they really have to. So that gives you a lot of reason to say this can work. See, to me, if it can work at a local level and it can work at the provincial level, you would argue that why can't that work at a national level? Why can't someone emerge? One of the things that I did before I retired from IBM, we had this conference, and it was the President Aquino that came in to speak to the group, And he stood up, and I thought it was fascinating. He said, I am going to get the following 4 things done. And he articulated what they would be. And a lot of them was standard of living in healthcare, but fundamentally 4 things. And if I don't get them done, then they should throw me out, or I shouldn't run for election. I mean, I was like stunned. I've never heard a politician say that before. And it was accountable, it was clear, it was standard of living, it was education, it was healthcare, quality of life kinds of issues. Very important in this country. And maybe there's a chance, but I do think that, not to be pessimistic, because you see it work at a local level. Like, you really see it work at a local level. We've done a lot of projects with these guys in Stockholm, not just, I can take you around the world, but they make it work, right? Crime centers in New York, traffic in Stockholm, congestion in London, Galway Bay, clean water, they make it work. It's just when you get to this higher level that they tend to struggle. So I really think that they tend to struggle, quite honestly, because they're not held accountable. I mean, if they were held accountable, a lot of the people who won re-election around the world, based upon their results, should not have been re-elected. So they're not held accountable, because they're able to make whatever case they make on why it wasn't their fault. And in business, you don't have the choice. Whether you like it or not, however you view how we're paid or not, it's ultimately your scorecard. And as I say to my colleagues, if you don't like it, don't play the game. It's like sports. If you run a professional franchise in football or US football or European football, if you don't win for 2 years, you are no longer the coach, right? So if that's the nature of the beast. So to me, society doesn't hold our leaders accountable, and if they did, they behave differently. Now, I could be naive. I've never been a politician, and obviously no one would ever elect me based upon that statement.
Terrific. Thank you. Pascal, I guess the other, this is sort of longer term, but you've spent more time than almost anybody I know dealing with essentially multinational governance issues. And it looks to many of us as this is an uphill battle in many ways, and that the financial and other connectedness of the global economy is running ahead in multiple dimensions of our institution building around global coordination and whatnot. Do you think we're at a turning point? Are you optimistic about this as you look forward? Or are we going to go into higher risk territory as this mismatch gets bigger?
No, well, what I think is that this contradiction in a globalized world between the necessity to address a number of problems globally and the fact that power remains local, we have to live with. Because none of these terms of the contradiction is philosophically to be regretted. Power has to be near to the people. Mm-hmm. Legitimacy is a direct function of proximity, and that's social anthropology. It's not history. It's just a reality of how power should work. So power has to remain local. But we also know that a number of issues need agreements at a level which is a global one. So how do you cope with that? I think the way out is to break the monopoly of states, sovereign nation states in international relations. There have to be other than state actors, like other public institutions, for instance, big municipalities. There has to be businesses who have their own legitimacy vis-à-vis their consumer, vis-à-vis their stakeholders, vis-à-vis their personnel. And there has to be more engagement of civil society, because in many ways, on a thematic basis, civil societies can coalesce better than the old structures of the sovereign nation state. So I'm not pessimistic, but we should be more creative than we've been. We should understand the previous model, which is the one we've had since the Middle Ages, which is based on the sovereignty of the nation state, where treaties of commerce were signed between the king of Croatia and the Egyptian pharaoh, and because that was done this way at that time, we have to do it again. This we have to change. So we have, in a way, we have to avoid, in many ways, what we are in today's world, which is too much what I call diplocracy. There's too much of a monopoly of diplocrats on the way power works in this world, and we have to make it more flexible.
Very interesting. But it's a long learning curve. Let me suggest we open it up to the rest of the group. Yes, Robin. Could we have a mic or?
They usually are well organized.
Well, we're waiting for the mic. When I was chairing the Growth Commission, we recorded all the meetings that we had, and we had these mics where you had to push the button, and I always forgot. And there was this very obnoxious young man who would say, Mike, Mike.
Mike.
Over here, please.
Mike.
Right.
So I wanted to come back to a question that I've heard you talk about right after the 2008 global financial crisis. You talked about there being a new normal. Everyone on your panel gave a fairly depressing, outlook for next year. Everything's kind of meh, I mean, you think that well, at least it's not as bad as the Asia crisis in Asia, You think businesses are like scrabbling for growth, and maybe they can cut some costs, maybe they can find 2% growth somewhere, You think Africa's the best bet out there because there's nothing else out there. So this is, fairly bleak. So Mike, what's the new normal 5 years after the Asia crisis?
I'm not sure I should, okay. So to me, the idea of the new normal was meant to capture that, the notion that's been talked about here, which is this was an abnormal, big distortion balance sheet recession, and that we were not going to have a normal recovery. We've since elaborated on that, and we've experienced it. Sam already said it. The expectations were highly unrealistic right after 2008. I sometimes describe it as, we had a heart attack, we didn't die, now we'll have a normal recovery. And the growth forecasts at the IMF and everywhere else have been systematically down, moved right down, once every 6 months. Now I actually think we're kind of past that. People have realistic assessments, and we can see light at the end of the tunnel, in my view. I mean, you can see the way the American economy is recovering. You can see that Asia and emerging economies generally have held up and shown a remarkable degree of resilience and responsiveness to shocks and distortions. And in the European case, I guess, I'd love to hear Pascal's view of this. I've been amazingly impressed with the durability and commitment to the European project. I mean, I thought that with that much painful deflation, absent the exchange rate reset mechanism in some of these southern countries, that eventually somewhere in the political and social fabric, something would break. People would get up in the morning and say, you know what, this isn't a good game to play, let's play a different one. And that is wrong. Europe looks like it's going to hold together and get through this, even without very adequate adjustment mechanisms. And once they do, then I think you'll see a kind of pride and a resurgence in Europe. So my view is we've lived through more than half of the new normal, and because it was never meant to be permanent, and that we can see the light at the end of the tunnel. Yes.
Maybe I think there's this theory that the new normal is going to be an age of turbulence. Turbulence is not an aberration, but it is something that we have to live with. I think that is not really true. I think we will go through turbulence once in a while, but basically our journey will not be one of continuous turbulence. But the very important aspect of normal, the new normal, is something that we refer infrequently, but we do not really give that much of focus. Is that unlike the 1950s, 60s, and maybe even 70s, we have a problem of inequality throughout the world, not only in America, not only in Europe, but also in Asia, in many of the Asian countries. The social upward mobility, which was a feature in the 50s, 60s, 70s, is no longer happening. We know from statistics that in the year 2012, the latest statistics that we have for the United States, 93% of the income went to 1% of the population. And that is not an aberration. It is something that is happening as we speak. So in that sense, something is happening that is not normal. If we assume that what was happening in the 50s, 60s, 70s is normal, something that's happening that is not quite normal and very dangerous. Because we are creating a stratified society where we have the Brahmin and the non-Brahmin, and the Brahmin class is becoming smaller and smaller, and the non-Brahmin class is becoming bigger and bigger, where the real wages, where the real income for the bulk of the population throughout the world is not improving. So that is a new normal which is very dangerous.
Sam or Pascal, do you want to comment on this, or should we go ahead?
No, I'd say, I guess the thing, I'd give the perspective, I wasn't trying to depress you, I was just trying to say, I used to have an expression, it is what it is. I mean, it is what it is. 08 and 09, they were what they were, and we had two of the best years in IBM's history, and the stock at an all-time high. So you just need to do something about it. I mean, because it is what it is. I mean, to sit around and tell yourself the worldwide economies will grow at 5% next year, so therefore you should have your business growing double digits, that ain't what it's going to be. So deal with what it is.
Yes, sir. I'll get to you next.
Thank you. I just want to refer to a remark which was made by Pascal Lamy about youth unemployment, and that kicked off a few questions actually for me. I fully agree with you in terms of the European debt crisis. Obviously, the restructuring and austerity seems to work. And I think we over that, whether we need austerity or growth. Obviously, more and more people understand austerity is necessary as a basis for growth and not the other way around. So Europe will hold together, and that was also for the Eurozone. Whether that means every member will, and each member will be there forever, that's another question. For instance, Greece will never pay back. Everybody knows this, so we probably will see another shifting this 50 years or whatever. We've had that before in Greece between 1898 and 1940. There was an international Greek debt committee, and that only was finished to work because of World War II. Otherwise, it may have gone on for, until now. The second point is youth unemployment. I don't think this is a risk confronting us because it's a homemade problem. In most of the country, younger people are denied access to the labor market, A, because of a too-tier labor market system, and B, because of a too high minimum wage. For instance, in France, with $9.50 for untrained young people, no one can afford to employ them. And so the political risk, and that's maybe a bigger risk, the political risk of inaction. And this is not a threat from the outside and a challenge And the same goes for the pension systems. I mean, they're just not fit for the demography, and there's no way around that. In Europe, you have to work much longer, to 68 or to 70, and if this is denied by politicians or by labor unions, there's no way around, and no one will be there to finance this. And even the new Grand Coalition in Germany is more or less looking backward and very defensive, rather than taking the chance of a Grand Coalition making a grand leap. This is not the case. On the other hand, you see the world economy, and I would be interested in knowing that I would be much more optimistic. It's in a better shape than ever before. There are more people in the world working than ever before in history. The vast majority lives in countries which have embraced capitalism or market economy or whatever you like to call it. Poverty is almost disappearing. The UN Millennium Goals will be achieved, even according to Jeffrey Sachs. So the world is less unequal than it was 20 or 30 years ago. And the problem is maybe for the world rather, and that is partly a question to that. How are we going to face a situation in the world very roughly where we have two groups of countries, one with high debt, little growth, and bad demography, and others with low debt, high growth, and good demography? China may be a bit in between as far as demography is concerned. But unfortunately, Europe is in the first group, and the other one are all the emerging markets. So it is rather a political challenge than an economic one. And the biggest risk I see is the political inaction in those countries which have high debt, low growth, and bad demography.
Well, may I react briefly? First, I never make a distinction between economic risk and political risks. These are risks. Whatever they stem from, if there is a political risk, it will translate in the economy, and if this is an economic risk, it will translate in politics. So this frontier for me intellectually is a bit of a problem. Second, in this sense, youth unemployment is a risk. It is a deep political risk in many countries of this planet. And we've already seen that, and in my view, more to come if this is not properly addressed. And again, let's be pragmatic. Some countries have been doing extremely well in putting up training, apprenticeship, cash conditional guarantee for youth employment. Some companies do that for their own. So it's not rocket science, but there are things that work. Lastly, may I disagree with you on the point you made about inequalities? You're absolutely correct. Poverty has been reduced during these decades as never before in human history. But that doesn't mean that inequalities have shrunk. Poverty has been reduced as an absolute level, X dollars per day, but inequalities, both within countries and between countries, but mostly within countries, including developing countries, have risen very rapidly in the last decade. And some would say, well, you know, that's the price for development. That's how transformations happen. You need capital accumulation and only those. And others would say, be careful, this model is becoming intrinsically inequalitarian, and this will raise political problems in the future.
One more question. You've been very patient, and then we're going to turn it over to the next group.
Okay. Thanks.
Yes.
I'd like to pick up on Pascal Lamy's point about the going beyond the nation-state system and national sovereignty and the need for government and business and civil society to work together effectively. I think you're absolutely right. So much so that at my university, we have just created a new Master of Tri-Sector Collaboration to try to develop a coterie of people who actually know how to do this, which is something that hasn't been done before as far as we know. But we've also done quite a lot of looking at efforts to bring about those kinds of collaborations. They're extraordinarily difficult, and they're deeply challenged by the fact that there is no accepted pattern of accountability. We were hearing about how business has a very simple system of accountability. Governing systems at the national level, by and large, also have formal structures of accountability. But for the kind of tri-sector collaborations that you're talking about, there are real challenges to figuring out how do you bring the right people in, who decides who the right people are. I was wondering in the work that you've been doing looking at these alternative systems of governance, what steps we can be taking and thinking about to make them more legitimate in the long term?
Well, I mean, I think you point your finger on the real issue, which is legitimacy, which is, what we need for any sort of collective organization to be sustainable. Now, there are different kinds of legitimacy. There is the traditional political legitimacy, and one of the reasons why megapoles or megacities are in a way a better instrument for tackling global problems is that mayors of these cities are more accountable. And because they are more accountable, they are more directly linked with the people, they are more powerful. And I think this, but in many ways, businesses have a form of accountability. They are accountable, again, to their customers, to their shareholders, to their staff. When I was in business, I never had the notion that, when I was in politics, I was accountable, and then moving to business, no, it's a different, no. And after all, civil society movements are sort of based on that. Accountability is what really drives them, even if they sometimes have a tendency to question more the accountability of others rather than look at their own. Now, that heterogeneity, I think, doesn't matter. If you look, for instance, at what happened on HIV/AIDS, which is, let's say, a reasonable success of tackling a global issue, the reasons why some public institutions, some civil society movements, some businesses, notably in the pharma industry, after a lot of difficult internal debate on, generics and tiered pricing, it worked at the end of the day with a very heterogeneous set of people. And I think this is the way in. And in this Oxford-Martin Commission report, for instance, on climate change, what we suggest is what we call C20, 30, 40. 20 countries, 30 multinationals, 40 megacities. If they agree, then the climate change agreement is there. If we keep digging in the hole of the UNFCCC with 200 countries fighting with each other, it won't work. So in many ways, let's be very pragmatic. Let's look at what works. And what works is more of these coalition systems.
I think we've overrun. Thank you so much. Will you join me in thanking the panel? Well done, guys.
I should